Hey, what's good, y'all? My name is Christian Kirkley. I'm a full-time trader and entrepreneur. I trade for a firm called Apex Futures Trading, and my buddy Rashid.
What's up, man? I'm here. I'm on my own YouTube channel. I do credit. I do a lot, man. I got a clothing brand. Big time entrepreneur out here. I do Turo rentals as well.
Social media marketer.
Social media marketing, man. I do it all. So I'm joining him on this video, man. He's finna break down trading for y'all, give y'all an overview, man. So let's hop into it, bro.
Yeah. So there's many different forms of trading, right? So there are where you just day trade, you buy a company or a stock, a futures contract in one day and you sell later, or you just buy something, let's say in January, and you sell in July. You know, that's the difference between trading and investing. Whenever you're trading, you are buying and selling in the pursuit of profit. Whenever you're investing, you're buying and holding something for a long-term gain. So trading is usually, you know, anywhere from a few minutes a day all the way up to a few months. Investing is usually anything over a year. They're taxed differently. You pay higher taxes on short-term capital gains. So whenever you sell something, if you've held it for less than a year, you pay higher taxes. There are ways around that. If you're trading futures contracts or options on futures, then you pay lower taxes. I'm going to talk about that in my course, though. We'll get into tax efficiency and everything. But I know a lot of y'all are curious, like, how do you get started with trading? There's a few ways to get started. You can download free apps like Robinhood, Webull, different things like that. I do recommend learning on YouTube, free courses. Then eventually, you know, hire yourself a mentor, pay for some good quality courses eventually. Once you kind of get a good foundation, start making some money.
Paper trading too. You know?
Paper trading.
That's a good way to learn, man.
Yeah. Go ahead and open yourself a paper trading account. That way you can go ahead and start messing around
feel
on
with
there.
the system and how it works and how to market and all that.
Start turning a profit paper trade, and then you go open yourself a real brokerage account. Another thing you can do is you can trade for a prop firm, right? Where you trade their money for a fee. You pay a fee to trade their money, and then you get to keep what you make as a certain percentage. So Apex, you keep 90% of the gain. So they let you trade anywhere from a $25,000 account to a $300,000 account, and you can trade up to 20 accounts. So if you trade 20 $300,000 accounts, you're trading like 1.2 million or something like that. And then, you know, like you can make like hundreds of thousands of dollars a year, pretty much, trading. So I'm trading right now $10, $50,000 accounts. Then in August, I'm going to bump it up to 20 $50,000 accounts. And that's along with my Robinhood accounts and my other accounts that I trade. I have a pretty large portfolio, diversified portfolio of different things. Different ways to learn about trading, honestly, experience. Start small, risk a small amount of money, never put anything more than you're willing to lose, because you will lose. For every dollar you risk, you want to try to make at least $3. So for example, if you buy Apple at $100 a share, and you might think that it'll be worth $300 a share in a few years, you want to make sure that it's going to be worth it, right? So you don't want to pay for more. That you don't want to pay more than $1 for every $3 you stand to make. Another tip about trading is get plugged into a community. Have people that you can share ideas with. There's going to be buddies who'll be like, "Hey man, look at this company, look at this and that," and y'all are going to share, right? How much money can you make realistically trading? So I'll just be straight up. 90% of traders lose money consistently. So there's three different types of traders. There's the consistently profitable traders, which take money from most of the other traders in the market. There is the roller coaster traders who do really good and then they lose it all and then they do good again. And then there's the people who just suck at trading. So with trading, it's a zero-sum game. So if you're trading a futures contract or an options contract, which is pretty much just a contract, it's an obligation essentially. It's leveraged. You make a lot more money with it, but you can lose a lot more. For every buyer, there's a seller. So for example, if I buy, you know, a contract of oil saying that oil is going to go up and it goes up by, you know, $100 and I make a few $1,000s, Well, Rashid or someone out there had to sell me that contract, and they lose $1,000.
They lose $1,000. Yeah.
For every winner, there's a loser, and for every loser, there's a winner in the world of trading. Investing's different.
Yeah.
Because you're just buying a piece of a company and it goes up in value. But that's why there is not as much leverage, and it takes a lot longer to make money in investing. Investing's a long-term thing, which you should be doing, but trading is something that you can make active income doing. You can make thousands and thousands of dollars a month trading if you have the right mental skill set. It's really probably 80% psychology and 20% skill. So I should say 20% knowledge, I should say, because the mindset is a skill. So like, discipline, consistency, all those things make up like 80% of your trading base. If you have all the market knowledge in the world and you know everything about every company and all these different fundamentals and things like that, but you don't have discipline or consistency, it really doesn't matter. You're going to get beat out by the guy who barely knows anything about the market, but has excellent discipline, consistency, work ethic, all these different things, right? There's going to be days where you lose money. Everyone loses money. I heard a quote, a trader who is afraid of losing is like a surgeon who's afraid of blood. So don't be afraid of them losses. It's going to happen. Keep your losses small. Let your winners run. You want to be diversified, right? So there's many different things you can trade. You can trade oil, gold, currencies. You can trade different companies. There's a million and different ways to skin this cat, right? You just want to make sure that you have access to trade different markets. And just know that different markets are correlated. So whenever one market goes up, another market goes down. Money doesn't disappear, it just changes hands. So whenever someone whenever a stock loses money, someone gained money because they shorted that stock. So every time there's some money, the instrument or a financial ticker goes down, someone makes money. Whenever it goes up, someone makes money. The market, I'm just giving y'all a bunch of tips here. And then we're gonna dive in, of course, later on. But this is just like a brief overview of the market. Whenever the market falls, it falls 4 times faster than it rises. So if you're a bear and you're short selling, you can make money 4 times faster than whenever you're going long. So like I was trading yesterday and I was long for a second on tech stocks, that NASDAQ tech index. And then I was riding the wave up and then it just said, and then it started diving off the cliff. I immediately reversed my position and went short and caught a profit. But it's like I heard the market up is like a staircase and down's an elevator. So you got to be ready to short. There's some people who only short.
That's it. That's some people's strategy right there. Only short. And I hear about that a lot.
So you want to be nimble. You want to do both. Because you can make money when the market goes up or down. That's the difference between investing. A lot of investors only make money when the market goes up. If you're trading, you can make money when the market goes up or down. That's trading right there. You want to be dynamic and you want to be able to make money in any market condition, sideways, up, down. There's going to be bear markets where the market only goes down all year. It happens. 2022, the NASDAQ, the tech index, and the S&P dropped like 20%. So you want to be short the market during those time periods, and then bull markets like we're in right now, where it goes up, you want to be long. What I mean by bull and bear markets, think about it like this: a bear, they swipe down, so that's why the price goes down. They call it a bear market. A bull, when they attack, they go up with their horns. That's why they call it a bull market.
Oh snap!
So like as a beginner in like the trading arena, do you have any questions or something that people should probably?
Cause I'm a beginner in the trading arena too, man. I'm trying to get my feet wet with it too.
We could kind of use this as me teaching you, because I know you got some questions too.
For sure. So like I said, we're dropping some sauce here, and also at the same time, y'all getting some knowledge too. Cause like I said, I don't do this. I'm trying to get into this, so y'all gonna hear it from the man himself. So okay. So based on all the stuff you said, what will you say are the most safest things to invest in? Like, if I'm just getting started, trying to get my feet wet, what would be the most safest thing I should choose to get in?
So I recommend for people that are just getting started, the S&P 500 index. So it's a combination of the 500 biggest companies in America into one investment. Technically the safest are utilities. So companies that do things like water and power, those type of companies, waste management, like, the garbage company, those are really safe companies. Coca-Cola, they've been around for ages. those are really safe investments. They pay dividends, which mean they pay a percentage of their share price to shareholders as a reward. So for example, Coca-Cola, they have about a 3% dividend. So if you had, let's say you're old and you got $1 million in Coke stock, then they pay you $30,000 a year that you can use just for bills and stuff like that. So usually the older, more established companies they pay higher dividends. The safer companies, they've been around for a long time, they pay dividends.
Dividend stocks, I heard about
dividend
those. Those are good to get in.
You can live off those.
Okay.
Once you build up a big enough nest egg.
Okay.
But tech stocks and growth stocks that get you a bigger return, appreciation, build you more equity, those stocks pay lower dividend rates because they're reinvesting their dividends into their company so that they continue to grow. But for example, like a company like Walmart, or let's say a company more like Johnson & Johnson, right? Or Pfizer, those old companies, they're going to pay out more dividends because they're not as worried about growth, because let's be real here, how much more are they going to grow versus a company like Tesla?
You're right.
You know, so like as a company gets older, it increases its dividends so that it can continue to entice its shareholders to hold on, because even a company like Apple that pays like a 1% dividend or 1.5% dividend, if you've got 100 million in Apple stock, like there's people out there that do, 1.5% of 100 million, that's 1.5 million right there. That's enough reason to hold on to it.
Yeah.
You know, so dividends are one way that people are enticed to hold on to a stock. Usually the safer the stock, the older the stock is, usually the safer generally, unless it's in a dying industry. Also, be aware of a company that's paying a really high dividend.
I would want to see your opinion on that.
Yeah,
some companies do pay a really high dividend. That kind of entices the person to be like, man, let me put my money in here.
It's sketchy though.
It's sketchy.
So like, there's like a company in Brazil called Petrobras. You got to be careful with them because they pay like a 17% dividend at the moment. They're doing that because they're risky and they're corrupt. So like, there's some companies that will spike their dividend to try to get people in and raise capital, but they're doing that because they're going downhill.
They're going downhill, trying to do some sketchy.
Honestly, if you're over like 8 or 9%, you want to be like, okay, why are they over that? So you want to go and you want to look at the company's financials. You can go on Yahoo Finance and you can go and you can look at their fundamentals, their earnings. Did they lose money this year, this quarter? All these different things. Are people selling the stock? Yeah. So you want to do some research if you're doing long-term investing. If you're trading, you can just short that company. Yeah. So any other questions you got, man?
Yeah. So as far as like advice and stuff, like, you know, because you see all the people on Twitter and everything, and they be saying, okay, this is what stock you should buy. So it's a lot of people that's throwing out this information. So who would you recommend listening to, and where would you go for knowledge, you know?
Yeah. So recommended, I'd say audiobooks. So The Disciplined Trader, anything Warren Buffett puts out there, the Jack Schwager Market Wizards book are really good. You want to go on YouTube, and like I said, anything TD Ameritrade, they're solid. Who else is solid out there? Charlie Munger puts out some good investing information. Another good trader is he wrote a book called what's it called? One Good Trade is a really good one. Trading in the Zone is excellent. Honestly, I'm going to recommend books. So audiobooks are really good. And for YouTube, I would say, honestly, you got to be really careful with YouTube trading.
I heard that, yeah.
Just be careful. You can't go wrong with a good, solid audiobook. You want to go on Investopedia.
Yeah, that's a good resource.
Investopedia got me started. They're really solid. They have really good free, in-depth content and education. Yeah, I'd say with those sources, that's going to be a really good foundation to get you started.
So if somebody trying to learn from you, do you offer mentorship as well?
Yeah. So I have a mentorship as well. So I walk you through how to get started trading. I teach you the ropes. If you don't like your course, if you don't like what you get out of it and you aren't seeing results, I offer 100% full money back guarantee because I'm very confident that I can get you rolling. Like I said, I'm making several $1,000s a month right now trading myself. I was able to quit my 9-to-5 from this income. So I believe if that's something that you want to do, you can do the same thing. So contact me, hit me up. We're going to have a link to my course.
You'll have a link down below to the mentorship, the courses, and all this stuff that we got going on. But all right, we're closing out there. Let's do it.
Yeah. So, like I said, it's going to be how to trade, all the different knowledge, all the different mental skills you'll need, all the resources that I have. I'm going to walk you through. We're going to do live trades. I'm going to walk you through how to trade, get you set up on all the right platforms, what you need to be looking for, weekly calls. Yeah. It's going to be in-depth. This is what I do. Yeah, so I got you. Peace out, y'all.
All right, y'all. And make sure y'all like, comment, subscribe too. Don't forget that, man. Let's get it.
Let's get it.